Good morning, and a very friendly virtual welcome to you all to this next in our series of COVID-19 webinars. My name is Mark Molesworth. I'm one of the tax partners with BDO, and this morning we're going to be talking about the government's recently announced stimulus package, the JobKeeper Payment. Thank you very much for joining us. We have had an overwhelming response really to this webinar and indeed the whole series, but we've had almost 900 registrations for this webinar, and I can see very large numbers of you even listening live. So thank you for coming along and welcome. Clearly, given the level of interest in this, we've had many questions provided to us on registration forms and many questions that have been provided by people who've already logged into the webinar system. We have attempted to design this presentation to deal with as many of those questions as we possibly can. But clearly, with this many people registered, coming back to individual questions is going to be difficult for us. The JobKeeper package is, to put it mildly, a huge social welfare program. It's to be delivered via the tax system. The tax office has the main carriage of the delivery of this. In previous similar social welfare programs, the government has turned to Centrelink or Services Australia to deliver. This time this is coming through the tax office, and that's because the JobKeeper payment is interesting because it's designed partly to be a business subsidy and partly to be an income support payment. And we'll talk about why that is and how that is as we go through the presentation. But to a certain degree, the government is looking to employers to act as something like Centrelink in a lot of cases. The other thing that I would say, and it's reflected in the huge number of questions that we've received, is that there are actually many unknowns about this program at the moment. The Prime Minister announced last night that Parliament would be returning next Wednesday in order to pass the JobKeeper payment legislation, but we have not yet seen the draft legislation. And based upon our experience with the cash boost to business and the other stimulus measures that were announced and then presented to Parliament last week, or the week before, sorry, it is likely that we will not see the draft legislation until it is presented to Parliament next Wednesday morning. And then we won't know what the final version of the legislation looks like until Parliament finally passes it, which will probably be Wednesday night. With that timing in mind, there are two things to note. The first is that we've designed this webinar this morning to tell you what we know about the program, about the JobKeeper payment, but also to flag what we don't yet know and what will have to be confirmed as we see the legislation. Now, I'm going to give you a number of what my marketing department would call informed opinions and what unkind people might call guesses about how this program might be designed. But please take them in the spirit in which they're offered, which is that we don't really know, and there's a very small number of people buried deep in the heart of the Treasury Department who actually know what this might look like at the moment. So where I'm speculating, please understand that it is speculation, and you will probably need to defer any real decisions until next Thursday morning at the earliest, when we know what this legislation looks like in its final form. In that regard, we intend to run another webinar on JobKeeper next Thursday. And the timing is still to be determined. It will appear on our COVID-19 webpage and will be registration links will also be emailed to everybody who's registered for this webinar and all of our other contacts. So please watch this space. I think it's important that we run this webinar today to give businesses an indication of where this program is going. But we also thought it was really important to circle back to you all when we get to next Thursday and we understand exactly what the criteria for applications for the JobKeeper payment look like. So with all of that in mind, let's start talking about some of the details of this payment. So the first thing that needs to be determined as an employer is whether you're eligible for JobKeeper. Now, the announcement has provided that in order to be eligible, an employer needs to show a decline in turnover of at least 30%. And that number is 50%, or that percentage is 50% if the employer's turnover is more than $1 billion. The turnover decrease is intended to be measured by reference to the same month or quarter last year. And in the most recent update to the fact sheets on this program, Treasury indicates that that will be by reference to the business activity statements lodged, for example, for the month of April this year versus the month of April last year. For people who are on quarterly business activity statements, they indicate that it would be based upon the quarter ended June this year compared to the quarter ended June last year. There has also been a further announcement in relation to eligibility, which is that the tax office who is administering this program will be given broad discretion to take into account circumstances where there is atypical performance. That means comparing the month of April this year to the month of April last year, for example, doesn't give a real indication of the level of suffering of a business because of this virus. So some of the examples that are given are newly started businesses who weren't even in business in April last year, may not be able to show a decline in turnover compared to last year because they just didn't exist, or they were just starting out and they've grown rapidly, but they still have suffered a considerable drop in turnover compared to what they would have expected. The other example that's given are potentially acquisitions during the year. So if there are situations where the business has been running along, it's acquired another business and so doubled its size, for example, in December, but then it suffered a drop off in turnover in April. But compared to what it looked like in April last year, it can't show a 30% drop in turnover. So those sorts of circumstances, and I'm sure many others, will be the subject of tax office discretions. Because of the broad application of this measure, I would expect that the tax office will start, once the legislation is passed, will start putting out blanket statements about where you can assume that its discretion will have been exercised. This is not a situation where the tax office will want to hear from every business who is in one of these slightly atypical situations. They will just not have the personnel to deal with it. So whilst we will see the legislation next Wednesday night, next Thursday morning, we should also be looking for the tax office's administrative discussion about how it's going to exercise these discretions that will be given to it. There is also an indication that there will be some tolerance in the estimates of the 30% or 50% decline, because this measure, in theory, starts for fortnights beginning on the 30th of March. So in other words, Monday. What that means is that the decline in turnover, for people to assess whether they're eligible for this program or not, they will have to estimate what their decline in turnover is likely to be and stick their hand up to say, yes, I think I'm going to be eligible because I think I'm going to have a decline in turnover of 30% or 50%, as the case may be, just based upon my understanding of business conditions. There's going to be some tolerance where at the end of the day, the decline might not have been 30% or greater, where it might have been 28% or 29%, or we're not quite sure where the parameters will be, but there are to be some tolerances built in about declines that are estimated that then don't quite come to fruition, but which are close. There's a number of things that we don't know about eligibility of employers. To start with, we don't know what measure of turnover is going to be used. My best guess, the all indications would seem to show that it will be turnover based upon the turnover figures put into the business activity statement. So in other words, when you lodge a business activity statement and you're registered for GST, you have to report your turnover. It's likely that in the base case scenario, that will be the turnover figure which is used. However, there are different measures of turnover than that in the tax law, and there are also grouping provisions in the tax law which may or may not be relevant here. So, for example, We don't know whether that's going to be Australian turnover, worldwide turnover, group turnover in Australia, or ungrouped turnover in Australia, each entity standing alone. We just don't know as yet. We're not certain what the tolerance levels are going to be around the estimates. So at this point, I can't say where the line is going to be drawn. However, I would say that the number of businesses that we're talking to who are going to be approximately on that line is a fairly small proportion of the total number of businesses. So I think we need to be a little bit forgiving at this point, because this is designed as a support package, which is to have broad availability. Hopefully the tolerance levels that are put into place reflect that fact. We don't know what the repayment obligations are going to be if somebody gets this wrong. So we don't know over what period of time the JobKeeper payment will have to be repaid if that's the case, if an employer was not actually eligible. We don't have, and I would expect to see this in the tax officer's discretions, we don't have any indication of eligibility where the impact is actually on your ability to collect your turnover as opposed to your right to receive turnover. So if I have a right to receive turnover, for example, I could be a landlord and operator of shopping centres. I have a right to receive rent. That probably still counts towards my turnover. The issue with my business is my ability to collect that from my tenants. We would expect to see something in the tax office guidelines about that, but we're not sure yet. And finally, eligibility of non-business employers. So there are a number of employers, for example, people with the disability who are employing private carers, parents who are employing private nannies, and so forth, who are not running a business, so arguably are not going to be eligible for these JobKeeper payments, but who equally are keeping someone employed in the economy. Whether they will be covered by the measure is not clear at the moment. My better guess is that they probably won't be, but it wouldn't surprise me to see a lobbying effort, particularly in the case of people providing care to those with a disability, to have them brought into the system. So that's how you determine whether an employer is eligible. Then you have to determine, well, if that employer is eligible, do they have any eligible employees in respect of whom JobKeeper payments may be received? So eligible employees are those employees who were on the books, so to speak, at the 1st of March 2020 and who remain on the books. Now, it doesn't matter if they've been stood down in the in the period since the 1st of March, or indeed if they've been made redundant in the period since the 1st of March and subsequently rehired, they will still count. But this is limited to employees who were on the books at the 1st of March 2020. It applies to all types of employees, full-time, part-time, or casual. There is a reference there to 12 months regular service. So in other words, I think that's mostly applicable to casual employees. The measure is designed to support casuals who have been in a regular pattern of service over the preceding 12 months. Basically, eligible employees are limited to Australian citizens, Australian permanent residency holders, or New Zealand citizens, what are called special category visa holders, which is usually New Zealand citizens. So it will not cover employees who don't fall into that. So other types of working visas will not be covered. And finally, where an employee has multiple employers, the employee has the choice as to who they're going to nominate as their chosen employer. So in other words, each individual person, each employee, can only receive JobKeeper in respect of one employment relationship. They can't double dip or triple dip or multiple claim, but the employee is in charge of nominating who the chosen employer is. Now, for most full-time and a large proportion of part-time employees, that will be relatively easy because they will only have a single employer. Where we have casuals who are working on a regular basis for multiple employers, those employers are going to have to be careful to make sure that they have sufficient records to show that employee has chosen them to receive the JobKeeper claim, just so that the employer is not caught in a position where they and another employer are both making JobKeeper claims in respect of the same employee. Now, the tax office has a lot of data these days about who is employed and who relates to whom because of single touch payroll. And there is an expectation that the tax office will be able to do a lot of the heavy lifting in terms of notifying businesses who their eligible employees are, because of the amount of data that the tax office now holds under the single touch payroll regime. There's a few things we don't know about eligibility of employees. The first one that comes to mind that I haven't seen ventilated anywhere is the requirement for a 12 months regular service period, and how that gels with the announcement about new and startup businesses who weren't in business 12 months ago. So I'm not quite sure how the 12-month rule is going to work. If it only applies to casuals, I could perhaps see how that would work, but at the moment there's no clarity on that. We're not quite sure what date the 12 months relates to. Yeah, I mean, in the first instance, it would seem relatively clear that it's 12 months up to the 1st of March. But my question is, this program is intended to roll on for the next 6 months. And my question is, well, in 3 months' time, is that 12 months, is that still eligible employees? Are only those who have 12 months service up to the 1st of March? Or someone who had 9 months service at the 1st of March, in another 3 months, do they trip over the 12-month service barrier and therefore become eligible? That's not at all clear from the releases that we have at the moment. And finally, this was a question that was raised particularly by one of our attendees, is what's the interaction with the apprentice and trainee wage subsidy? So for anyone who saw our webinar on the first stimulus measure, if you are a small business with fewer than 20 employees, the government is going to reimburse you 50% of your apprentices and trainees' wages for the 9 months from the 1st of January through to the 30th of September. So those businesses will already be receiving a 50% wage subsidy in relation to those apprentices and trainees. There's no clear answer as to how that will interact with JobKeeper. One of the things that I was really pleased to see in this announcement was that this package provides support to individual ABN holders, so individual contractors, if you like. None of the previous measures appeared to provide much support to individual sole traders. Individual sole traders under this measure will be eligible if they can show at least a 30% decline in their turnover. So what that means is that those individual contractors who might be critical to the continued operation of your business, whilst you won't be administering JobKeeper on their behalf, they themselves can apply for JobKeeper and just have that $1,500 a fortnight floor on income, so that hopefully they can see a way to remaining in the industry until this virus crisis passes over, and they're still there to be in your supply chain once we get to the other side. Of course, including individual ABN holders then raises other questions that we don't know the answer to yet. The first one which occurs to me is, what about partners of partnerships? This is because partners of partnerships just cannot pay themselves wages, and so if an individual ABN holder, individual contractor is eligible, why is a partnership of two people who are working in partnership but really are in essence two sole traders working together as a partnership, why can they not be eligible for JobKeeper? We don't know the answer to that. They very well may be. The more difficult question which has been raised, and where we may not get the same positive outcome as perhaps for partners of partnerships, is in the case of trusts and companies, where the trust and company carries on business and then remunerates their owners solely through trust distributions or dividends, so distributions of profit, if you like, where those individuals who stand behind the trust and company don't take salary, it's difficult to see how they become eligible under the announcements that have been made to date. But I guess watch this space. There is certainly a significant amount of lobbying going on behalf of those types of organisations, those types of businesses, but we haven't seen any answers from the government on that as yet. So now, how is the payment worked out? So the JobKeeper payment is $1,500 per eligible employee per fortnight. The first payment is intended to be made in May, relating to fortnights commencing on the 30th of March. Presumably that relates to the fortnights in the month of, effectively in the month of April, albeit that the first fortnight starts on the 30th of March. The payment, when it's made to the employee, is taxable and subject to pay-as-you-go withholding. So in the situation where you have an employee who'd been working for you for at least 12 months, was on the books as at the 1st of March, and then you'd had to stand them down because there was no work for them, so they're on 0 hours, 0 wages at the moment. If they're claiming the tax-free threshold and all the usual disclaimers around the Australian tax tables, but they should be entitled to receive from you about $1,300 a fortnight after tax. I think the exact number is $1,308 after tax, and of course you're responsible for the pay-as-you-go withholding payment to the government of the tax on that amount. It's really important to note that the payment must be passed on in full. So this is why I say this is a part business subsidy, but it's also a part income support payment being made through the tax system and being made through employers. So what that means is, to take the really simple example of my employee who's been stood down on 0 hours, 0 pay at the moment, the business will receive $1,500 in respect of that person and will have to pay the full $1,500 before tax to that person. So in other words, as I said, about $1,308 to the person and the $192 in tax as pay-as-you-go withholding back to the tax office. So this is not related to how much the employee was working before the 1st of March. We don't have to do some sort of averaging about their wages. We don't have to say, well, they were a casual and they were only receiving $1,000 a fortnight. The answer is, for every eligible employee, they have to be received. If you are nominating them as an eligible employee and you're receiving a JobKeeper payment in respect of that eligible employee, you have to be paying them at least $1,500 a fortnight gross. That is one of the conditions on receiving the JobKeeper payment. So you must pass it on in full. Your payroll systems are going to have to be configured to make sure that they can deal with this, because anything that's paid to the person as wages remains subject to superannuation guarantee. So in other words, if this person is working a few hours for you, so that's, for example, they're entitled to $1,000 a fortnight, but they're an eligible employee and you get paid $1,500 a fortnight in respect of them, you have to continue to pay them wages of $1,000 a fortnight, and then you top them up to $1,500 a fortnight by paying them another $500 a fortnight. So you take their total gross remuneration to $1,500 a fortnight as a minimum. The superannuation guarantee arrangements are that the wages, so the $1,000 a fortnight that they're entitled to, remain subject to superannuation guarantee, but the top up is not. So the amount that is not related to work that they have done is not ordinary time earnings for superannuation guarantee, and you don't have to pay superannuation guarantee in respect of that top up amount. So I'm going to show a graph next, and to try and illustrate how this works. So we've got 3 employees, Alice and Bob and Clarice. Alice is working enough to be entitled to be paid $2,000 a fortnight. Bob is working for you enough to be entitled to be paid $1,000 a fortnight. And Clarice, well, unfortunately, we've had to stand Clarice down. So she's not working for any hours for you. She's not entitled to any wages or salary, but she is an eligible employee for JobKeeper. So what happens with respect to JobKeeper is I've got 3 eligible employees. I'd be entitled to receive from the government $4,500 a fortnight in respect of those 3 eligible employees. With Alice, she's working enough for me to be entitled to $2,000 a fortnight. I keep paying her salary or wages of $2,000 a fortnight. Bob, he's working enough hours for us to be entitled to $1,000 in the fortnight. I pay him the $1,000 as wages, and then because he's an eligible employee for JobKeeper, I've got to top him up to $1,500 a fortnight. And so I pay him that blue bar there in the graph, which is the extra $500 a fortnight to top him up. Clarice just gets a straight pass through of the JobKeeper payment. So I receive $1,500 in respect of her. I pay her $1,500 as JobKeeper. So for Clarice, I've got no superannuation guarantee obligation in respect of that $1,500 that I pay her. For Bob, I've got a superannuation guarantee obligation in respect of the $1,000, but not in respect of the $500 top up. And Alice, I still have a superannuation guarantee obligation in respect of the full $2,000. Now, whether by design or not, there's an interesting outcome from the JobKeeper payment, and that is that if, and it's a big if Alice and Bob and Clarice are totally substitutable units of labor. So in other words, they can all do the same job. They're all just as efficient. Really what I need to get out of my 3 employees is the equivalent of $3,000 worth of value, $2,000 at the moment to Alice and $1,000 at the moment to Bob. I need to get $3,000 worth of value out of them. As an employer, I actually have an incentive to redistribute those hours of work across the 3 employees. Because if I think about my current situation, which is described in the graph, I receive $4,500 in job seeker payments, and I'm paying out as wages $3,000, and I'm paying out as job top-ups $2,000. If, on the other hand, I were to redistribute the work amongst Alice and Bob and Clarice, assuming that that was strategically sensible, then I would still have $3,000 worth of wages. They would just be, all 3 bar graphs would look a bit like Bob. I'd still receive $4,500 in job seeker payments, but my total, I wouldn't have $500 of unfunded productive work being done. All of my productive work, if it's distributed equally across my employees, would be funded by the job seeker. At the moment, I've got $500 of unfunded productive work being done by Alice. Now, as I say, whether that's by design or not, that gives employers an incentive to spread the productive work amongst all of the workforce. That's probably a good thing, not from a tax point of view, but from keeping people engaged in the workforce and keeping people, keeping their mental health high. So I wonder whether this was actually a design element. Of course, that needs to be strategically sensible for you. If Alice and Bob and Clarice are not substitutable units of labor, then clearly it would not make any sense at all to redistribute the work amongst them simply to gain $500 a fortnight, because we're not getting the work done as efficiently. Anyway, I thought that was an interesting design feature, whether intentional or not, of the JobKeeper payment. Now, with the payments, the biggest question we keep getting is the fact sheets say that the JobKeeper will be paid in arrears. The question is, does that mean that we have to pay those top-ups, pay that top-up to Clarice, pay that $1,500 to Clarice during April, based on a promise by the government that we'll get that back in May? Or are we able to say, well, Clarice, you're entitled to JobKeeper as long as we're eligible for those fortnights in April, and we will pay it to you in arrears once we get the payment from the government in May? We don't have any clarity on that at the moment. I've encouraged both the Tax Office and Treasury that they need to clarify that quickly, because if it's the intention that we should be paying these people during April out of our quickly diminishing cash reserves, or out of the um, out of the good graces of our bankers, then that's a really important message that needs to be delivered. We don't have that clarity yet. Unfortunately, we will have to wait, it would appear, until next week to get that clarity. But even with all these unknowns, there are steps that we can take. First step, and I'd encourage everybody who thinks they might even possibly be eligible for JobKeeper, is to register with the tax office. If you go to the tax office website, you click on their COVID-19 link, which is on the front page, then you click on the Register for JobKeeper button. All it is an expression of interest. But I would encourage everybody who thinks that they might even possibly be eligible to go and do it, because once you get into the system, you can always say, oh, hang on, no, I'm not eligible. Don't pay me anything. It's fine. You're not making a claim simply by registering. You are simply saying, I might be eligible for this, and I'd like to receive further information about it as it becomes available. I'd also stress that I think it's important that employers in these circumstances take industrial relations advice. I've been talking about the tax impacts and the design of the system from a tax point of view, but there are industrial relations, employment law implications of taking someone who you may have let go and putting them back on the books, and treating them as a stood down employee. There are industrial relations implications for businesses of doing that, and it's going to be important that you understand those before you make um, uh, promises to your employees about what's going to happen. In this interim period, we can be talking to our employees, because I'm sure employees will be calling businesses saying, hi, you let me go a week ago. I just want to know, are you going to be, are you going to be eligible for JobKeeper, and should I be nominating myself to you? Talk to your employees, collate their nominations, particularly from your casuals and your part-timers, to say, do you want us to be your nominated employer for the purposes of JobKeeper? In this interim period, check out your payroll system. Make sure that it's set up, it's configured to handle these sorts of payments. This is not a simple payment because of the interaction with people who are still working some hours but may not be receiving $1,500 a fortnight in pay. So it will be important to make sure that our payroll systems can handle it. There's been no announcement about anti-avoidance rules in respect of these provisions, but you can bet your bottom dollar there will be anti-avoidance provisions in the JobKeeper package once it's presented to Parliament. There were anti-avoidance provisions in the Cash Boost for Business package, which was a maximum of $100,000 per business in cash receipts. This is going to be orders of magnitude larger than that. So you can be absolutely certain that there will be anti-avoidance provisions. What does that mean? To me, that means don't do stupid things. Don't go out and say, oh, there's a massive loophole here that I can see in respect of my business. I'm going to set up all these things. I'm going to claim that every member of my family was on the books as an employee at the 1st of March, and then I'm going to say that I've stood them all down. Please just be aware that the anti-avoidance provisions will be there. In the early days, it's highly likely that the tax office will accept claims and will pay out. But what we don't want is to get through the coronavirus crisis and then have a crisis of businesses going broke because they're being attacked by the tax office about overclaiming these stimulus packages, and then being asked for all that money back. That would be a really bad outcome. And finally, I know it's really hard, but I would seriously encourage you to do all those preparatory steps and then stop. Enjoy your weekend. Enjoy the first part of next week. Keep working on your business, not in respect of just the stimulus packages. And when we get to next Thursday, we will have some much more definite messages for you, which will allow us to give, all of your advisors to give you specific information about your particular circumstances. I think one of the big risks in this current crisis is crisis overload. If we keep thinking about these things every day of every every minute of every day of every week, we will see a spike in mental health issues. So I really would encourage you to put in place the preparatory steps. They give you a purpose over the course of the next 6 days, and then next Thursday, we'll be in a position to hit the go button on particular advice for your particular circumstances. I would encourage you to register for next Thursday's webinar when the registration link comes out. If you missed anything that I said, or if you're not quite certain, you're more than welcome to ask me questions. I do respond. You'll understand that the level of my email traffic has gone up a lot over the last few weeks, but I do attempt to respond to every request for information that I get, understanding that there is a lot of stuff that we just don't know at this point. This webinar will be available on our website. It has been recorded, so if you missed anything in it, feel free to go back and re-listen to the recording if you can stand listening to my voice for that long. And please stay safe. Please continue to battle through this crisis as we all are, and we look forward to talking to you again next week. Thank you very much.